To the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the guy we named the show after, AJ Brown. Good morning, AJ.
Hey, everybody.
I'm loving the shirt you got there. Feeling very, what is that, Beach Boys?
Beach Boys festive. I don't know what you call it, but yeah, I feel very tropical.
Yeah.
I thought I'd
going into the... I think I lost you there for a second. Go straight into the markets. I feel like everyone and everything is reacting off of this supposedly shocking CPI number earlier this week. But was it really that shocking? I mean, inflation has been the talk of the town, I don't know, for months now.
I mean, I don't have any other way to explain it except for folks are just really, really, really optimistic, right? So you look at this number right here, and you can see that we've got 8.3% for our year over year, which is what keeps getting reiterated over and over in the mainstream media. When you separate out food and energy and you look at the year over year number, I mean, that's a high number, 6.3%. But then you add in food. And I think that the energy, for the most part, gas prices and things like that have tempered. But man, food prices are up. Like, depending on where you are in the US, food prices can be up anywhere from 10 to 25% what they were a year ago. But when you factor that out, still without food and energy, it's still 6.3%. That's very, very high.
And in terms of, my own day-to-day, I would say that's the food is where I see the most inflation, right? Like I was having a conversation with somebody yesterday, and, they went into the store and something that used to be, 75 cents is now $1.25. Even those dollar iced teas are now $1.25, right?
That's right. That's right. But the other thing to notice is right here, month over month. So month over month, it didn't change. But what that means really is that the inflation is staying at a high rate, and they want it to taper down. So they actually would like to see the month over month start to be negative. And the fact that it wasn't negative, or that it didn't tamper down, that it's only at the peak, is kind of what's troubling investors. They're like, you know what this means? It means that the Fed is going to have to do tighter. They were hoping to see numbers starting to go over the peak, and it looks like the numbers are still right at the peak. So that's what bummed people out. Check this out, though, Sip. When I look over at the report that was given Wednesday, this is not as publicized, but it's called the Producers Price Index. And the Producers Price Index is that like wholesale inflation versus retail inflation. And the wholesale inflation year over year is still quite high as well, 8.7%. And what that's telling me is that a lot of the wholesalers are taking cuts out of their profit margins in order to get it to the retailers. So those small business owners are sort of taking a little bit of a cut in order to make sure that they don't raise prices too much on the retail level to make retail customers run away. But you can see on the month to month, they're starting to just go over the peak, but they wanted it to be more. They really wanted it. They wanted investors, the people who control the markets, really wanted to know that the Fed was going to be done with their strong arming. And it looks like the Fed has to do some more strong arming. One more data point, retail sales. So when we take a look at retail sales, this was reported on Thursday. See if this comes up here. What it showed is that retail sales has not tampered. Retail sales is still as strong as ever. So people are still spending. Now, some folks who have delved into this data really believe that that had a lot to do with back to school. I mean, you have to buy those kids school supplies. I mean, that's the whole dealy bob, and a lot of local governments have made tax-free days where for school supplies they get rid of sales tax for a couple days. So there's a influx of retail buying in August. So this could have been inflated a little bit by back to school, but what it's telling me is that folks really don't want to buckle up. And so the Fed's going to keep tightening until people show that they're buckling up.
Yeah, and the one headline that I kept seeing on some of the financial news sites, or at least the discussion that was taking place, was potentially 100 basis points in terms of the next Fed move. Do you think that's on the table?
It's on the table. 100 basis points. And also, we always look at that bond selling. The bond selling is in full effect, although you know how when we look at this little table here to show how much the Fed has on their IOU sheet, and they've been selling off, they've been getting rid of stuff on their IOU sheet. And when I take a look at what was reported yesterday evening, so it takes them a couple of hours, actually a couple of days, to update their graph here. So if you look really closely, this says they're showing data up through September 7. Last night in the evening, they reported for September 14. And it actually looks like they did a little bit of buying of bonds. So I think that they're trying to surf the edge of that wave without, tanking one direction or the other. And so I think that this kind of sell-off caused them to say, whoa, 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 we need to taper this a little bit. This has to be a little bit more gradual. So they did a little bit of buying, it looks like, this past week to kind of tamper this crazy reaction to the CPI. I mean, I think 1% is on the table. I think more bond selling is on the table, but I also think that, the transient, I call these, this is a term that I coined here at Trading Trainer. When a news headline comes and totally like throws the market off, we call them transient external stochastic shocks. And so transient means it comes and it goes, and then the market kind of reacts and then it resets. External means it's not coming from internal market forces. Stochastic means it's bigger than usual. It's market moving. And a shock, it just shocks everybody. So I think this CPI number, along with the numbers that followed it, were kind of a transient external stochastic shock that the Fed is moderating a little bit. But I think in the long term, we better have our belt and suspenders on because people are going to be pulling down our pants.
Yeah, and and just last week when we were analyzing the S&P 500, we were asking the question of, well, why is everybody buying this? Why are we seeing the rally? And I think the answer was we were just waiting for next set of inflation data just to put everything back into reality that, hey, things cost a lot more than they did last year.
I mean, a lot has changed for us. It really has. Let me show you right here. So this is my S&P chart. Yet last week we left it off like this. We thought, let me get a nice color here. We thought, we were wondering how far this would go up, right? And we were saying to ourselves, if it goes up past this 4,000, it's not even on the chart anymore because it's recalibrated. But if it goes past about 4,400, that was our target number. We're going to buy into this uptrend. Well, it sure didn't do that. In fact, it didn't even come anywhere close to parity, which would be around 4,300, 4,200 would have been my low level of like a parity. It actually pulled back. It gave us a confirmation that this was indeed the top. It pulled back and it's been pulling back. And so this actually is the first hints of returning back down to a downtrend. It's not a mature, confirmed downtrend, but as of yesterday's close, we actually beat the previous close. If I take a look at these closes, the previous low close was right here, which was September 6th, and that close was $3,908. Yesterday, we closed at $3,901. And then today, especially led by companies like FedEx and UPS with all of their slowdown in shipping. The market gapped down at open, and it's been going down ever since. So we're going to be confirming an ideal move in the down direction. A couple more of these sip, and we're going to be back to thinking that we're trending back down.
Yeah, the level that I keep seeing is the 3,900. I think that's a level that goes back quite some time. So I keep reading that a lot of people are keeping their eyes on that 3,900.
I
In
mean,
terms
we're
of
south of that, dude.
yeah, but I feel like it may kind of try and decide what it wants to do. But the news, like you said, the FedEx news is not good for the overall market because so many other businesses rely on FedEx and just all the shipping. And if they're coming out saying, hey, things aren't going to look so good, the stock, I think I keep seeing that it's down as far as like the lowest level it's been since 1980. So that's quite a pullback for a very well-known name.
Yeah. The scoop is there was one more report released this week on Thursday called Industrial Production, where the government summarizes what's been happening as far as manufacturing. And as you can see, they were thinking that manufacturing would be up a little bit from last month. And instead, manufacturing's doing more declining. This other number that's really interesting to follow, this capacity utilization rate. When I started investing in the late 90s, this number would never go above about 70, 70, 72, 73. And what that has to do with is how well you can get work out of a workforce. And the reason why the number keeps ticking up is the replacement of the workforce with robots and artificial intelligence and people that don't need, getting rid of jobs, right? And so the capacity utilization rate, like how efficiently we can use the workforce, has been going up, but production has been going down because there's just not much demand. So that makes sense why FedEx has nothing to ship. There's just nothing being manufactured, right?
Yeah, and then I believe that the FedEx news led to some other analyst downgrades. But I guess one thing we want to look at real quick as well is the VIX, because I know we always like to compare these big moves, these bigger moves, to what's going on the volatility side.
Yes, yes. And just as a heads up, our big target for our move would be a little bit less than 3,900 in the S&P 500. We're wondering if 3860 is going to hold out. 3860, if we get below 3860, we're kind of thinking to ourselves that we're beginning a downtrend. So 3860 is our number here at Trading Trainer. But turning our attention over to the VIX. So the VIX is a measure of implied volatility. Now, a lot of people get confused between historical volatility and implied volatility. Historical volatility is looking through the rearview mirror, and you can measure historical volatility on the charts. Like if I look at the SPX here, I can measure historical volatility just by looking at how big the bars are, right? This, like for instance, this bar that happened this past Tuesday when the CPI was released, that's a volatile bar, right? You can look at them. These are volatile bars. Any bar that's had a lot of movement during the day shows volatility. That's historical volatility. You can measure historical volatility. You could use things like the true range or the average true range, and you can just measure them because it's what's happened in the past. When I'm looking through the rear view mirror, if I'm like, pretend like, the current price action is a car, looking at the rear view mirror is exactly measuring the historical. Implied volatility is looking through the windshield. And so how do you get this like insider scoop on what implied volatility? And VIX is one of the best measuring devices of the implied volatility. It's basically correlated to the S&P 500. But the way that they do that is they look at options. They look at derivative sales, right? And there's a way to mathematically pull out of derivative sales what is the demand for them. So if you can factor out from derivative sales the time component, because most derivatives have an expiration date, and also the underlying symbol price, what you're left with is kind of this fudge factor that goes up when people are buying derivatives and goes down when they're selling them. And why do people buy and sell derivatives? They buy them when they're feeling uncertain. They use them as insurance, right? And so you can actually derive from option sales, from derivative sales, whether there's an increase in demand for these things or a decrease, which correlates with, is there a fear or a comfort going on in the market? So that's implied volatility. And it's interesting, if you plot those curves of implied versus historical, a lot of times if the implied is going up and the historical isn't going up as fast, you kind of say, gosh, these option prices are overpriced. People are buying these. What's going on? And so right now, especially today, take a look at this. The VIX jumped up. If I pull my magic marker out, the VIX jumped up pretty considerably. It's at, it's trading higher. It's wrestling with these highs that it has done, but it's actually trading even a little bit higher than that. We're going back to stuff that we haven't seen since July, when the VIX was steadily coming back down. So we want to watch this. We want to watch this for, is the fear increasing in the markets? And I think that the VIX might actually go up until we have our Fed meeting in the next week, right?
Totally. So we'll definitely keep an eye on the VIX. It's one of the most critical elements to, trading options, which is exactly what we do here at Trading Trainer.
Sip, you want an inside scoop?
I always want an inside scoop.
You can actually, the VIX, besides being able to buy and sell the VIX itself, so being able to buy and sell into fear and into scrutiny, the VIX is optionable. So you can actually set up strategies, and we do this a lot in order to hedge our portfolio. We set up a strategy that, for instance, looks a little bit like this when you look at the profit and loss diagram. And we have this, it's basically two vertical spreads. And I know I'm getting into some mumbo jumbo that a lot of folks aren't too privy of, but you can get this vertical spread to pay for this vertical spread. And this trade normally just breaks even. And we place it about, if we're using monthly options, about, every couple of months. And if we're using weekly options at a faster rate than that. And every week, this thing typically breaks even. But, the VIX, if I go out in time, the VIX tends to, let's go maybe to a 1-year chart. The VIX tends to pop when things get uncertain. The VIX tends to pop pretty aggressively, as you might be able to see here. And so what my strategy does is, most of the time the strategy just breaks even, and it's just a strategy we apply. It doesn't do anything. Every time it expires, we reapply it. But when the VIX pops, our strategy shoots up in profits. And so if we've got any sort of trades that react negatively to the VIX popping to implied volatility increasing, this trade totally compensates for it, because it pays like 400 to 1.
Love it. Love it. And so if that was a little bit, if anybody watching or listening for the first time, if that was a little bit above your head, what we're going to do is give you an opportunity to join AJ inside of his daily workshop, where he breaks this strategy down, all sorts of strategies, his secrets to selling premium, to using options to make money off of your portfolio. And so I'm going to go ahead and throw that link into the chat. So if anybody wants to check it out, also, we'll go ahead and take a little break here. While we do that, if anybody wants to or has a question on a specific name or a specific stock, feel free to drop it into the chat. And if we have time, we'll go over it. Otherwise, we'll go over AJ's pick of the week and a few names from some of the members inside of Trading Trainer. So stay tuned, and we'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home. giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So, AJ, your pick of the week. Oh, this
Yeah.
excited.
It's an exciting pick.
All right. Yeah, Cooper. This week's AJ's pick of the week is Chinese electronic manufacturer NIO, ticker symbol NIO. What are you seeing setting up here, AJ?
Well, we talked about NIO a couple of weeks ago and how I'm kind of turned on by this stock. This is the Chinese manufacturer of the electronic car, the Chinese EV contender. And, the stock kind of got decimated with many of the Chinese stocks when, the Chinese government was starting to be a little bit oppressive. But it's been going sideways, which makes it a fantastic premium sale. And the reason why I wanted to highlight it is we talked about a couple weeks ago buying some of the NIO stock or buying some replacement call options instead of buying the stock. Buy some deep in the money, far out in time call options. Well, now is the time to be selling premium. I mean, the way that we look at this is we look at our channel that we defined. So I've got my little channel here between about $19 and $21. And I put a little ruler on here. I'm just using the off-the-shelf Fibonacci price retracement lines here. And if this thing starts to trade heavily above 2178 when it reverses this 38.2 or 40% retracement line, then what I would do is just take my profits. But it didn't. It kind of topped out there and it's on its way back down. Now is the time for us to be selling premium and buying protection against this symbol. And so what that's going to do is the premium is going to be able to give us some income. It gives us a kind of a dividend against NIO. And the protection will protect us from NIO falling too far before it regains its footing. But at the same time, that protection, if we buy it now, we're going to be buying it at bargain basement prices. And that way, when it does bottom out and it starts to go back in our favor, we can sell that protection. It did its job. It protected us, but we can sell it at a nice, healthy profit, adding to the economics of the position. So now is the best time to sell premium. We're going to get the most for the premium, and we'll be able to sell the protection. So to give you some examples, for the premium, I want to sell near term. And so it looks like...
Can I ask a quick question?
Absolutely.
Why is it the best time to sell the premium?
Well, that's a good question. So premium, in this case, we're going to be selling call premium. And so as the underlying symbol price has gone up from where we initially bought it, that call premium has gone up as well. The call premiums move in the same direction as the stock premium. So when the stock goes up in price, the calls go up in price. So if we want to sell calls, now's the time, where the stock kind of finds a top and then starts on its way down. That's the highest price you're going to get for that call. So now is like a perfect time to be selling it when it's up here at the top of the channel, because the calls are going to be really expensive. At the same time, we're going to buy some protective puts. So our protective option is going to be a put with a strike price down here, and puts behave opposite of the underlying symbol. So as that call has been going up in price with the stock, the put has actually been going down in price. So we're going to be selling the call at its highest price that we can get for it, and we're going to be buying this put actually at its lowest price. I mean, that's exactly what we've been taught to do since we were kids, is to buy low. So we're buying the put at its lowest price and sell high. We're going to be selling our call at its highest price. So let's take a look at kind of what options we might be interested in. So we're currently trading at about $20.50. So for the premium, I want it to expire as quickly as possible. The one that's expiring this evening maybe is too quickly. So I'm going to be looking at the October 21. This one's going to be expiring in about 35 days from now. And if I'm selling the calls are on this side of the chart, I'll probably want to sell this 22.50, and I could get $1 a share. I mean, that's 5% ROI right there. So I can get about $1.05 per share just by selling the 22.50 call. And then at the same time, I want to buy that protective option. And so I want to go out about 3 to 6 months. I'm going to actually, January or February looks really good. I'm going to look at the January option. And coming back just really quick to the chart to take a reference, I probably want my protection to kick in somewhere around maybe the 1918. If there's not a 19 or 18, 17.50. Let's take a look. So there's a 17 and there's a 20. Let's see what we've got in February. February is more traditional. We have a 17.50. So if I want to go with the 17.50, I'll buy this option knowing full well that this is the cheapest price it's going to be. And because I've gone 3 to 6 months out, time decay is not really going to affect this price as drastically as it would on the near-term option. And so this will protect my butt as NEO falls. And then once NEO finds a bottom and starts heading back up, I'll be able to sell that protection for a real nice profit as well. So I'll make money on this, on the premium, and I'll make money on rolling out the protection. Two sources of income on this pullback. It's really a good position, and I wanted to highlight it for today.
Yeah, and the price point is real nice. We have a follow-up question from one of the audience members, and that is, I think this is a good question. If we don't own NEO, is it time to short it? But you're kind of doing that with the options that you're getting into.
Well, and so what this user is talking about, what this viewer is talking about, is that initial position that we were talking about a couple weeks ago, whether it was here or here, that initial position actually covers us. It makes it possible for us to sell that premium and buy that protection. But if you don't have the covering position, he's talking about actually doing this position in reverse. In other words, establishing a covering position here and then waiting for it to bottom out and do the same thing. Sell the premium down here and buy the protection. So when we featured this a couple of weeks ago, we were talking about buying some call options or buying the stock. What he's talking about is, can I short the stock or buy some put options in preparation for then selling some put options and buying some protective calls? And absolutely, that's the beauty of this strategy. You could do it in both directions. Now, if you don't have one setup, you could start the next one. I don't recommend often, playing the two sides against each other. So trying to do on the same ticker, because that's kind of removing the diversification out of your portfolio. So one or the other. And NEO has been kind of going sideways ever since it stabilized after its big sell-off. So NEO is one of those symbols where you could absolutely use this signal that we have for a top that's forming and go ahead and start a position that's bizarro world, using puts instead of calls. So great observation.
Awesome. Appreciate the insight. Moving on to our next ticker symbol. This is a name that we've covered a few times throughout the show, and that is JetBlue, ticker symbol JBLU. And this is Becky from Boston. And the one thing I always like about JetBlue is it's so fabulously priced.
Yeah. What's also nice about JetBlue is it's finally, this was one of those symbols. Remember when JetBlue, we featured this, and we kind of, JetBlue and Frontier were in a big public fight over Spirit, right? And JetBlue actually wound up winning, much to the chagrin of the JetBlue investors. As you can see back here, this JetBlue investors were like, we're not sure we want you to do this, but the higher ups at JetBlue did it anyway. And so it looks like JetBlue has stabilized, and that news is far out of the mainstream media. People aren't really paying attention so much to this because the fight is over, right? And it's in the past. So interesting. It looks like JetBlue is trading. It looks like it's peaking up around $9 and it's trading down around $8. let me show you guys a nice little trick here. I'm going to pull up my calculator. If we take the width of the channel, so I said $9 and I said $8. So the width of this channel is $1. And if I divide that by the channel price, the average channel price, so the average channel price is halfway in between the 8 and the 9, $8.50. So if I take my calculator here and I say 1 divided by 8.5, I'm going to get a percentage. And that percentage in this case is 11.7, 11.8%. And the reason why I'm telling you, this is one of my 10 methods that I teach on how to determine if something is a good symbol for trading premium against. If this number is below 10%, I would start to get the heebie-jeebies. I would look for a different strategy to trade on it than selling premium. 10% to about 35% is our sweet spot. This is right on the edge at 11.8%. So I wanted to check it because it looks like it is kind of tight. Otherwise, I've really enjoyed any of the airlines, American Airlines, United Airlines, JetBlue, trading premium against it. And this, I think it was Becky. Becky, this is a great, it looks like JetBlue is bottoming out here. I think if you've been a viewer of our program, you probably have seen that this is the good time if you're thinking about buying some stock to go ahead and buy the stock. And then you can go when it tops out and do exactly like we were talking about on NEO. Sell your call premium, buy your protective options with a strike price down here. I think that's all possible. My only thing that I'd like to warn you about is I got a signal from the fast MACD that we had a bottom, and then that signal sort of fizzled away. And just today, we're developing a kind of counter signal to that bottom. In other words, I'm not sure, don't rush into it today. Wait for a true bottom to be found because we want to make sure that the stock is on its way back up before we start buying into this. In other words, don't shoot until you see the whites of these guys' eyes.
Yeah, and it looks like we've got a decent amount of upside if you just, hold it out. If we ever get back to those levels we were at a few months ago. So definitely appreciate the insight and approach. Moving on to our next name. I see a lot of people calling this modern day financial darling, and that's SoFi Technologies, ticker symbol SOFI. And this is from Merrill in Lincoln, Nebraska. So what are you seeing in SoFi?
Well, I've never traded SoFi before. I'm seeing, just looking at a 6-month chart, I see that SoFi must get some visibility around earnings time, because around earnings time, it kind of reacts. So I'd want to go look up when the next earnings report is coming, because it looks like it's not going to be this month, but it's coming up in the next couple months. I want to be aware of that because SoFi does react to their earnings releases. But otherwise, this is showing me the underpinnings of a symbol that would be good to sell premium against. And as Sip pointed out, it's at that price range that makes it affordable by a whole bunch of us. So I really, really like SoFi. Let's take a look at the option chain, because sometimes I speak too soon and there's no options to trade. So let's take a look at the option trade options on SoFi. I mean, wow. This is unexpected. I'm going to have to add this to my list over the weekend to really do some looking on, because at initial glance, this looks like a fantastic symbol to be interested in. Look at the open interest. There's so many people trading options on SoFi. Like, for instance, 38,911 contracts, 16,398 contracts. These are the near-term at-the-money options, the ones we would sell for premium. On the put side, 16,069 contracts, 6,000. And if I look at the bid-ask spread, the bid-ask spread is pennies, which means that the market makers know that there's a lot of people trading, and so they don't have to, make a large bid-ask spread. It's literally pennies. This is just a fun symbol to want to be interested in. Let me look over here at options that we may use for protection, gosh, there's still a lot of open interest. That's just fantastic. So, yeah, let's see where we're at. It looks like,
Just real
again,
quick, AJ, I got the earnings number. It's on November 9th. I don't know if that's
November
gonna
9th.
I don't know if that's gonna affect anything that
No,
any of your
so if you think
decisions.
about it, Sip, our options expire on the third Friday of the month. So they're expiring today. Today, by the way, is quadruple witching. So it's not only options that are expiring, it's index options, it's index futures, and it's single stock futures. So it's like 4 different types of derivatives. It only happens 4 times a year. This is one of those days. So you expect, for those people who are technical analysts, when you look at your volume this evening, don't use it for validation as we usually do, because the volume's going to be all over the place because all of these derivatives are expiring today. But when I take a look at October, man, the third Friday of October is the 21st. You said that earnings aren't going to be until November. So it does actually make a big deal. It means that we can go ahead and start selling premium and get some premium sold in October and have this trade go through before we go through earnings. So this opens the door for a real nice premium trade. I would look for an opportunity to either buy some stock or buy even a back month call option substitute if I could on SoFi. And then in a week or two, look to see if there's an opportunity to sell premium and make some money off of that. And I would play around with that. If I'm a little bit new to this symbol, man, I would put it in my sim account. I would put it in my paper trading account, and I would see how it plays out. Because this, on initial glance, this looks like one that we should all be looking at for us option traders out there.
Yeah, and I don't know if this has any impact on the stock price, but SoFi is the branded or the name of the amazing Los Angeles stadium, the SoFi Stadium, which is probably one of the most elite in the world. And so it looks like they're really getting out there in terms of, awareness and their name brand. So I've been seeing a lot of chatter around SoFi too, so I think we definitely should keep it on the watch list and keep an eye on it. Moving on to our next ticker, this is one that we've covered in the past, and I believe we've got some negative feedback in the comments from our last video, since it didn't really go the way that we wanted. But Stan in Erie, Pennsylvania, is wanting to get an update on Teva Pharmaceuticals, ticker symbol TEVA.
Yeah, let's take a look. So Teva shot up, and then it topped out, and now it's back down. It looks like, and let's see if this new level of support plays out for us. And it all depends on where we were with this symbol. So for instance, remember, we can play either side of this. So if you shorted some Teva, then you would have wanted to buy some, sell your put premium when you were down here and buy your protection. And that means that it probably shot through your protection, and your protection started to gain. And so that could have worked out for you nicely, especially if you had your stop loss order still in place, because now you've got that protective option making you a lot of money. On the flip side, if you were in this symbol and you own the stock, whether you bought it here and you sold some premium, bought some protection, sold back that protection, let the premium expire, and then it shot up, you'd probably be happy too. So it's all about how you manage these positions, Sip. Now, moving forward, I'd like to see if this is the new support and resistance level. So I'd like to see that this bottom actually holds. So if we look down here, we did get a signal about a week ago that there was a bottom, but now that signal's been reversed as of today. So let's see if this holds, if we get another bottom signal. If that's the case, then I'd get right back into Teva. I'd look at this as a possible buy for buying either the stock or a back month call option, and then wait for my opportunity to sell premium, buy protection. And if it overshoots that opportunity, then I'll just sell back that stock or sell back that back month call, and I'll move on to another symbol. But I'm not ready to abandon this one yet, Stan.
Sure. And I'm like surprised in the pricing of all four of our names today. They're all like $20 and under. So these are great optionable names to be keeping an eye on the
Mhm.
watch list.
That's absolutely right. These less expensive candidates that have established companies like SoFi, Tiva, JetBlue, those companies aren't going to go anywhere. These are the type of candidates we like to sell premium on. So we spend a lot of time talking about what direction the market's going to go next, and that's good to know. But the beauty part of trading the options the way we do, especially selling premium, is we can just analyze what the markets and the individual stocks and even the ETFs and indexes are doing, and then trade them accordingly, because our strategies allow us to profit whether the market goes up, down, sideways, whether time's passing by, or again, like we talked about in the beginning, man, even if just fear or confidence overtakes the market, we can just put ourselves on the correct side of that equation using our options.
Yeah. And if anyone wants to get some insight into the strategies, if anybody wants to learn how you can become part of the weekly mastermind call, we've gone ahead and added the link into the chat. Go ahead and jump into that webinar. You can watch it today. You can watch it tomorrow. You can schedule it for later. It's very relevant. But also, if you're looking to get a little bit more hands-on training, AJ and the Trading Trainer team has just launched a new coaching program where
Mhm.
you'll be able to work one-on-one with AJ or someone from his staff, and they will, basically help tailor a strategy around your style of trading. AJ, is there anything else you want to throw in there?
Last week we announced that we have a new coach, because that new coach is all ready to go, and we're starting to fill up his schedule. So, this people are looking for coaching. People are ready to commit, and they want results. And so they don't want to just, join in some webinars. They actually want more immediate results, and they want hand holding. So what our coaching program allows them to do is not only have those formal coaching sessions with us, but we give them a phone number where anytime in between those formal coaching sessions, they can pick up the phone and they can talk to a coach. They can get their answers, their questions answered right then and there. Or if they need help with a position, what do I do right now? Or is it time for me to pull the trigger? The coach can get on the line with them right then and there. And then finally, we throw into our coaching packages 6 months of trading with us. And so a lot of people are really, they get a lot of value out of trading with us, so that they can see what we do. We can look over their shoulder and correct any mistakes before they happen. So all of that's going down. So if that makes sense, you guys should, fill out the questionnaire. It's kind of like an interview process, because we want to make sure we're the right people for you. So we have a questionnaire online. I think I see that Sips put the link into the chat box. So you just click on that. And even if you don't know if coaching's right for you, try filling out the questionnaire, and at least you can have a talk with one of our representatives, because you'll pick up a couple tidbits even in that complimentary kind of call, right?
Yeah, and these strategies can be tailored to different risk like
Yeah,
thresholds
appetites.
or portfolio sizes or industries, right? And so that's kind of the idea, is to, hey, let's have a conversation and figure out what's going to be best for you, your style,
Hmm.
your schedule, the kids,
Hmm.
the mother-in-law coming in for the week, and that's the beauty of Trading Trainer, and just these strategies, and the team there is really just trying to get a system in place, because I always am very impressed how you talk about not really having to sit in front of the screens, right? Letting
Yeah,
these strategies kind of work for themselves.
that's
So
right. Fit it to your lifestyle. I've had so many people come up to me and they're like, "Oh, I just spent 2 grand on a program," and the program that they bought, it wasn't clear but that program that they bought was going to require them to be like up in the middle of the night doing some late night trading. And, when it became clear that that's what it was, the person was kind of disappointed because their lifestyle doesn't fit with staying up at 1 a.m., 2 a.m., 3 a.m., placing trades on the global market. So what we like to do is actually talk with you to find out what actually will fit with your lifestyle, not just kind of woo you with results, because we can get results in anything we try, but it's more important that we have something that you can do for the long run. Investing is a marathon. It's not just a sprint that you do once or twice, and then you're done.
Yeah, totally. All right. So the link is in the chat. So if anybody wants to have a discussion, a call with one of the members on the team, feel free to head on over there, fill out the form, get in touch. Otherwise, this CPI data, this FedEx news today. What should we be keeping an eye on? Basically going into next week.
The Fed meeting. So the Fed meeting's coming up, and we want to pay attention to that. With respect to these economic news, if it shows up in the mainstream media, that's always my litmus test. If it shows up on ABC, NBC, CBS, not just the financial like CNBC or Bloomberg's networks, but if it's actually showing up in the mainstream media, you can automatically say that, hey, this is a transient external stochastic shock. It's going to come and it's going to go, but you want to future cast. You don't want to make any rash decisions on that kind of reaction. That's what the rest of the market does, and it usually corrects itself. So just stay the course and then look for the more substantial actual market moving type news, and that's going to be the Fed meeting coming up and what the outcome is.
And those Fed meetings are always kind of like mind-blowing to me because if they go aggressive with 100 basis points to tamper the inflation, the markets might take that as very negative news, right? Because we haven't had a 100 basis point increase in, I don't know, a few decades, right?
The way that the market's always going to take, so the market tries to guess what's going to happen, and they do that by pricing in a certain move. And if that move is anything but what the market guessed, you can have negative consequences. So it's interesting that the market, it's not necessarily whether the move is a basis point or a half basis point or 3/4 of a basis point. It's whether that move is more than the market has priced in or less than the market has priced in, and you can have a topsy-turvy result. So long as the market has an idea of what's coming, they price in those results and they're good to go. But if the Fed kind of throws them a curveball, then that can change trading pretty drastically.
Yeah, so we're definitely going to keep an eye on that. I think everyone in the financial space, just in the business space, is going to be keeping an eye on that. It could definitely have huge effects across multiple markets. All right, and so with that, we appreciate everybody tuning in. If you enjoyed the broadcast, hit that like, hit that follow, smash that subscribe button, and we'll do our best to provide you with high quality content week in and week out. The links are in the chat if you want to go and join the workshop, learn more about the one-on-one program, and hopefully tune in. If you have any questions, feel free to drop it in the chat, send us a DM, and we'll try and get back to you as soon as we can. AJ, any final words?
Make sure your hedges are in place, folks. Make sure that you've got some sort of trades that will offset. If you've got your portfolio tending towards one type of strategy, make sure you've sprinkled in there. A good market manager, a good portfolio manager will have other strategies that can hedge those original strategies that you have. So make sure those are in place.
Awesome. And with that, everyone, we'll catch you guys next week. Adios, folks.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.